Morning all. Sorry I'm late. Busy morning. How are you all doing? Sorry. One of those mornings this morning. I suddenly looked at the clock and I was like, I haven't had my breakfast yet. It was like 3 minutes too. How are you doing? Morning Peter, Amy, John, day trader. Morning pot pickers. Good name. I like pot pickers. It's very old, showing your age, day trader. Virginia. Morning Robert, Andres, Christian, JC, Jerry, Gregors, morning, Evans, Jules, Tom, Evans, a bit of clarity needed here. H1M5, is it RSI 25 or 30? I'm using 25, but you could use 30. There's no right or wrong. It's one or the other. I'm using 25 though. At the moment. So yeah. Right, Fanar. Somebody's just asking in Telegram how to do something. So Fanar, this dashboard basically, is basically this is sitting in a window. So if you hover just above where all the text is there, you'll see it turns into a drag icon. Drag it up and down. Same way as you drag that up and down. It's just that is invisible because everything on here is turned white. So you just drag it up. There you go. Quick lesson in window adjustment. I know it's not obvious because but that's basically what it is. There we go. Right. Let's start off with the news. We've got 3 minutes to the open. We've just had retail sales come out for the pound. They were negative, 0.4 off of a 0.5 forecast. So not much different, really. So pretty much as expected result, which, as you can see, the pound this morning had a little drop on the news and then popped back up again. Well, it wasn't even a little drop, really. That. So, yeah, tiny little spike down, push back up again. So that's good news. Again, another negative news, which has not dropped the pound. So that's our third one now. We've had CPI dropping. We've had the interest rates not being increased, and the pound is holding its ground. So hopefully this is the bottom of this drop. Hopefully, but we will see. So that's the news this morning. We've also had the Bank of Japan rates overnight. Same as usual, they never change. It's always a negative 0.1. So that never changes. Morning, Frank. Franco, even. Overnight news. We've got Oeda has been talking, or is talking actually right now. Is this the press conference? God, that's late. This is normally about 4:30 in the morning. Okay, so they're having the press conference now. That's really late. Okay. I just wanted to quickly look at overnight news to see if they said anything else overnight. PMIs for Australia gone up. That's positive Aussie. CPI up for Japan as well. Positive Japan. Just wanted to see if they said anything about last year's FX intervention had its effect. We won't rule out any options for a response to excessive FX volatility. Still shooting across the bows. They are still not happy with the US dollar yen. Okay, so that's what I wanted to see, basically, that they are still keeping the pressure on, which means we should get a strong yen movement. So US dollar Japan, US dollar yen, basically. We got an ADR hit on that this morning. You see all these yen movements. Yeah, all yen, all ADR. We've had a weak yen off the back of those figures in that news overnight. So if this continues and they break and we keep going, the intervention will come. So just wanted to see what they were saying, but overnight, obviously, they've said that. He's talking this morning. We'll come through that in a minute. The market's just opened. DAX missed it. Gaps down. Couldn't get in. this morning onto the DAX. Sell limit order in place. That's a shame. Nice tight range on the pre-market 15 or whatever you were taking, but couldn't get it. So we have just tapped down into a double monthly low. So let's go back over here and look at the DAX. So these are monthly lows. That's last month's low. That is the previous month's low. We are there right now. So it might actually be a godsend. Not getting into that. I'm just going to cancel off these sell limits. Yeah. So I couldn't get on it this morning. The price action was too fast. As you can see, the candle closed at the low and then we gapped down. So by the time the EA had executed the orders, price had gone. We'd already gone. It's far too fast. This very rarely happens, but it happens. You can't get on. So basically it places sell limit orders because obviously price has gone beyond there. We've asked to take an order at that price. It's no longer a stop. It's a limit. So yeah, lovely. Would have had a nice 2R. Missed it. Nothing you can do. Again, back testing. You would have had that in your P&L, real life. You don't get it. That's why back testing is different to real world. So we are pulling back down into this area now. So this is a very, very strong support level, as we've seen. So we'll see how price reacts down here. Failing that, we've got this level coming up, which is that high there. That's the last resistance before we broke through. We haven't tested that. So 125 ADR to the downside. So if we break this low, DAX has got 125 to the downside to go for. We've still got this gap at the high there, which is it's really, really unusual. If you look back on your charts, it's really unusual to leave a gap that big, that long. Yeah, so this gap was formed at the end of July. So we've gone through all of August and September without the market being able to rally back up to that level. It just shows you how weak the stock market is still. Yeah, after coming out of that bear volatile, we look like we're going back into bull calm. If it was a bull calm, we'd be up now. We'd be gone away. Yeah, 2 months sideways, not able to get back. So you see how weak this thing is. So this level, I mean, obviously it's a very strong level. We are going to get limit order triggers here. But if that breaks, we could get a big flush out today. So if you did get short on the pre-market, I would suggest you either break even it or you've taken it off. If you did take that pre-market, chances are you probably would have got out with your TP there anyway. So as you can see, limit orders are triggering. They're holding this level at the minute. So we'll watch this and see where it goes. The 5-minute ORB today, if you do break it short, just be careful because there's likelihood we might sit here for a bit and run into resistance, support rather. The other thing you've got to be careful of this morning is we've got news in 15 minutes, or rather 12 minutes now. So this is all going to affect the euro this morning, and which is obviously in turn going to affect DAX. So 8:15, we've got the PMIs for France. 8:30 is the big one. Germany is the largest economy, so this is the one that tends to move the euro the most. The combined, you don't need to worry about because you will know the outcome of the combined because France and Germany make up more than 50% of the combined euro PMI. So that's why that's orange, because the market will move on that. So we will get some volatility off of that because it's a precursor to what that comes out as. Normally they come out pretty much the same. Then at 9:30, we've got the pound PMIs. We've got CAD retail at 1:30. Then 15 minutes after market open for New York this afternoon, we've got the US PMIs as well. So again, we're going to have the same thing at the open of the US session. We might find that we get a little bit of that for 15 minutes. So the 15-minute break after the open today is probably the best one to take there. But you never know. It could just flush and disappear. You can never tell, obviously. But that 15-minute range, you're going to get some decent volatility coming on the indices. So watch this. We may not get a lot of movement on the DAX. So that could be kind of what we're looking at today. There we go. So limit orders all triggered at the lows. Buyers are stepped in. So we'll see if the sellers try and have another run at that level. They may do. But I'm going to take a long. I'm going to assume that we're bouncing off the limits there. And we'll see what happens with the euro PMI figures. Right. So let me just quickly go back to the news while we're waiting for that to kick in. I just wanted to see if there's anything else coming out of UADA this morning. CPI to pick up after deceleration. Okay, so that's bullish yen. Seeing if he's talking about FX movement anymore in here. No. That's interesting. We still cannot identify what variable would lead to the achievement of 2% inflation and the end of negative interest rate policy. So, as I've said quite a few times, Bank of Japan has had negative interest rates for 6 years now. Negative 0.1, never changed. So, if you look at the inflation figures for Japan, we're currently sitting at 3.2. Obviously, the target for everybody is always 2%. 2% is a healthy economy. GDP goes up, unemployment comes down. Everybody's getting slightly richer all the time. We don't have to put interest rates up. Mortgages are cheap. It's just the happy land. 2% inflation is good. It's just like the S&P. You're constantly getting better. That's basically what everybody wants. So what they're saying is they're still wanting to get there, obviously, as everybody is. But very hard to achieve when you can't put that up. They just don't do it. I don't actually know why, to be honest, but they don't. So they are thinking about it. There's been talk over the last quarter from the Bank of Japan of potentially ending negative interest rates. Not quite sure what impact that would have. Never seen it, basically. So I suspect it will have a strong impact on the yen, as in it will be positive for the yen. But don't know. But he's talking about it again this morning. They haven't highlighted it red because it's something that they've talked about a lot, but never actually happens. So we'll see. But there's nothing else there. I suspect that's probably over. 808, probably finished now. So we'll see where we go. So we'll have a look at all these yen pairs in a sec. Okay, 808. So this is obviously second 5-minute bar. So far, we know the buyers are on board. What I would like actually to see is us hover here for the next 10 minutes. And then when the initial PMIs come out, hopefully we'll get a break. And if they try to break it short, I think they'll probably hit a brick wall. So I think we're going to get a bounce today anyway. That's a really, really good support level, that. So see how we get on. Right, let's have a look at ADRs, etc. Let me just catch up on the chat. Afternoon, Brian. Morning, even. Grateful Buster, morning. Kenley, Daniel, Abdul. Pitfall, morning. Tammy. Is there a definition of a strong support or resistance level? Not really a definition. Bear with me a sec. Bear with me one sec. So with support and resistance, there's a number of ways to look at it, basically. Everybody draws it slightly different and everybody has a different definition of it. For me personally, a strong resistance is a resistance that has been tested. So when you have a level like that, for example, that is a retest of that. Yeah. So if you find an area where price has moved to and pulled away from, and then it's got to that area again and pulled away from it again, you know that there is an iceberg order from an institution at that level where they are not happy to trade, let whatever the instrument is trade above that level. Yeah. Normally more than one. Yeah. And you'll often find it's a big round number. So this is the 16,000 big round number on the DAX. Yeah. So we pop up to 16,000, we've resisted it. We pop up to 16,000, we've resisted it. Yeah. So once it's been tested twice, you usually find the third time you will get a reaction. So it's a strong support. The fourth time, however, if it runs at it again, and especially if it's made a higher low, so you hit a level, you make a higher low, and then you hit that level again and again, that fourth time it tends to go. So there's no real right or wrong. Every time you hit a level, it's got a 50-50 shot, obviously. So, but basically, anything that's been tested multiple times, you can see it's strong. So this level here, yeah, is the low of the month. So we pushed away from it. We came back down to it the following month and pushed away from it. We've just come back to it again the following month. Highly likely we'll push away from it. The reason resistance and support levels work once they've been tested twice is you have more seeing that level. So banks and institutions will want to buy at a level they know they have support because it's more likely their positions will play out faster. So if you've seen a bounce at a level and you see it bounce again, limit orders will be placed at that level so that the banks and institutions can easily get into their positions. So they place the orders there so that when price gets there, it just goes again because you've got millions and millions and millions of dollars worth of money, or euros in this case, sitting at that price point. The only way it fails is if when you get to that price point, there is a fundamental reason that there is more likelihood of it trading below it. So if things have changed with fundamentals for a currency pair, for example, you might hit it and then bounce off of it and then slam through it. It's all to do with when you reach that level, are there more dollars short than people wanting to go long? That changes every time you reach that point. So there is no way of telling, but price moves from support to resistance, because it's what we call balance, or what the banks call balance. It's an area where there is enough participants to continually transact whatever it is within a zone. When you find that you get to a level and there's not enough willing parties in one direction, you get what's called a price discovery. So let's say that was the range. This would be a price discovery. So we're seeing if there's enough people to transact on this instrument at that level. If there is, you form balance or equilibrium at that level. If there isn't, you come back and you retest, usually the high of the previous balance, and see if you can form equilibrium. If you can't, you can return to balance. Yeah, that's basically how it works. So it's balance. It's basically what we call the propulsion move. Yeah, so it's an accumulation, a balance, whatever you want to call it, a propulsion move. Testing to see if we can get business up there. If not, we'll come back down and we'll see if we can get back up there. If we can't, we'll come back to here. We couldn't get long, so let's try short. So you get a price discovery short, and then you get a push back. Yeah, so that's all it is. The markets are literally just buyers and sellers wanting to transact. So if I want to buy stocks or if I want to sell stocks at a certain level, I will do it as long as there's enough people wanting to do it. If there isn't, you have to go and find them, which is what price discovery is. So they'll get up to here and they'll go, anybody up here want to sell? And they'll go, no. All right, well, anybody up here want to sell? Yeah. Oh, there's way more sellers than buyers up here, so we'll come back down. Yeah, that's what forms these levels. We don't want to trade above there. We don't want to trade above there. We don't want to trade above there. Next time we get up to there, if they still don't want to trade above there, that'll happen. If it doesn't, that'll happen. But the thing about support and resistance and why it works so well is if it isn't going to happen. You have to go and test the other end of the range or find another area where there's more buyers. So these guys take control and they push it down to the next area of support there. What happened here? We bounced. Yeah. But there wasn't enough people to push it back up to that level. So we collapsed. Where to? The previous level we bought from. Just the way it works. So a single level that's not been tested will usually have a reaction. That reaction can either be that or that. You don't know, but you usually get a reaction because there was a big reaction there before. There will be orders sitting here waiting to execute. The second time you get there, it's a little bit less risky. The third, a little bit more risky. The third time you get there, it's usually a lot stronger, which is why I'm looking for strong support resistance. Yeah, look at this chart as an example. What's that? Resistance, breaking, slammed through it, came back up to it, not sure. Support, break, resistance. That level there is where we were looking for either a balance or a price discovery. Price discovery failed, so we tried again. This is a different time. Now we were allowed to trade above that level. So they said, no, we're now going up. We're now going up. No, we're not. We're going down. We can't get through there again. So that's basically all it is. So if you go out to if you use this indicator, obviously it draws it all on there for you. But if you just go out to a high time frame and literally just draw a line everywhere you see a peak on your chart on the 4 hour, yeah, at the very, very highest points. I've got a video on how to do all this on YouTube, but and all the lowest points you can see. Yeah, so I'm just drawing, a line there, a line there, a line there, a line there, a line there. Every time you get there, there's a high probability of a bounce. It's a 50-50 shot of it actually working. If it does work, you've got a long way to go. If it doesn't work, you stop out. It's very simple. It's the simplest strategy. It's been around since the markets have existed. And it works constantly because we are sheep. And when I say we, the banks are also sheep. Yeah. So they will place orders at areas they know there's a high probability that they can get liquidity filled and start moves to make profit. That's just how it works. There you go. And there you go. As you can see it in action. Limit orders triggered. Off we go. And it works on every single time frame. You go down to low time frames. Same thing. Yeah. This is why I say I come in here every morning, don't I? I say the same thing. Right, let's look at the DAX. Where are we going? Okay, so the downside risks today are there, which have happened. Upside risks today are the gap fill, which is the previous day's low and yesterday's high. Why did it push up and drop from there? Because that is where we went and stopped last time. So we came back down and broke through it. So now it becomes resistance because it previously was support. So what's the upside risk today? There's two. One there. One there. Also, that's ADR. So if we hit this level here, there's a high probability we'll bounce. Why? Because it was a previous support. We broke it. So now it becomes a resistance. And this is why we have the propulsion gap indicator. It shows you where the strength of order required to break that level is. These guys are short. If they want to stay short, they need to add more orders to keep it short. We're trying to form an area of balance where we can conduct business and make an absolute fortune today until someone goes, no, I don't like this anymore. I want to try up here. One of the banks and institutions moves it. So propulsion gaps and support and resistance, pretty much all you need to identify where the market is heading. Whether it changes direction there, i.e. you're trying to pick the tops and bottoms, we know that's difficult, but we know where it's headed. Because that's what it's always done. And it always will do because it needs liquidity. The market needs to find people that want to transact. Where are people transacting? Well, they transacted there last month and they transacted there the month before. Well, let's go and see if they'll transact again. Yes. Oh, excellent. Brilliant. Job done. That's what all the banks want to do is execute orders. They need to just go to the places where people are willing to do it. And when I say people, I use the term people all the time, but it's not people, it's banks. We are 5% of this $15 trillion a day market. We make no difference to this whatsoever. It's the banks. We're watching the banks placing orders. We get on board and the banks have no idea we exist. So you're watching where the banks are. All you do. Okay, so DAX broken long. While I've been waffling, I've gone long. And the news has come out, which I've completely missed. 8:15, we had so negative euro, tends to be positive index, obviously, because it tends to go the opposite way to the instrument. So that is, I'm just going to manually place. In fact, what I'm going to do today, I'm not going to do the normal hedge today. I'm going to stop this. Oh, that's a big one. Sorry, I don't want to. It's a really awkward stop loss because it's too big. Do I want to risk 3% on that? We'll risk 1.5. So I'm not going to use a hedge today because I'd be hedging straight into, I'll be selling straight into that very strong support. Yeah. What's possibly going to happen? That. So I don't really want to hedge straight into support. This is why you'll hear people saying in courses and stuff, don't buy into resistance, don't sell into support. It's obvious. Yeah. If you've got a level where the market has turned twice, a la that, and you're here, if you buy there, what's likely to happen? Immediately it turn around. Yeah, this is why people get stung all the time. They go, hey, look, the price, it's moving up. And what they do is they wait for confirmation a trend has formed, they buy it, and then they wonder why it turns around and goes the other way. Well, you've missed the move. And now you're trying to buy it when the market's finding resistance to turn around at. It's obvious when I say it, but when you're starting out in trading, it's the most confusing thing in the world, isn't it? Which is what happens. That's how we learn. So euro is negative. German PMI will probably come out the same. They usually come out either very, very similar or the same pretty much from a production perspective. The reason the German is more important is it's the biggest economy and it's mainly made of motor export, which obviously manufacturing is the most important one. So we will see what happens there. The DAX also is absolutely chock full of motor stocks. You've got BMW, you've got Porsche, you've got Volkswagen, you've got Audi, you've got all the motor stocks in the DAX. Mercedes. So if the PMIs on manufacturing are negative, we tend to get a run on the stocks. You buy them when they're cheap. So bear with me one sec. So yeah, we'll see what happens, but that's what I would expect. The same results. So we've got 5 minutes. Once that's out of the way, the DAX is free to move, basically. So hopefully we'll get a run up. Would be nice to get a TP hit before that news, and then obviously looking for a run up into ADI. So that level there, support, 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 and that level there, resistance, resistance. Also ADR be upside today. Right. Morning. I've been trying to use the EA with preset files, but it never seems to work for me. I know I've told you in Telegram, I've told you in MQL5 if you're the same person. I've sent you the set file. I don't know. I can't help. I'm not sure. Try another terminal is all I can say. The opening range breakout EA, isn't it? It's this one. And your set file is oh, it's a 5-digit. It's just a 2-digit one, isn't it? That one. Yeah, I mean, that's basically all I've done is I've converted yours into a 2-digit. Yeah. Let's just see if it trades. Let's try and fix it live for you, shall we? See if it works. No, it doesn't work. Okay, what's wrong with that? I suspect it's probably the true amount of money to risk per trade, 1,000. Right, okay, so 1,000. 1,000 daily profit. And 10.05. 11.30. Training stop loss. No, yes. No. Item. True. What? What's wrong? What have you done? You've broken it. Is this for the opening range breakout, I take it, this set bar? Right, okay. Why is this not working, everybody? Weird. I don't know the answer to that one. Just use a default set file and just change something in it, because I don't know what you've done to that set file. It looks absolutely fine, but just use one of my set files and change it again, because I don't know what you've done to that, but that set file doesn't work. You've broken it. Congratulations. I've no idea why. There you go. Answered it live on air. Well, I haven't answered it live on air because I don't know, but use one of the defaults and then just adjust it. There's nothing wrong with the EA, but there is something wrong with that set file. But what it is, I don't know. I don't know. Can't answer that one. Right. Okay, we've got 50 seconds to the news. Let's just watch the news, and then we're going to have a look at the FX market. Pull back inside. I might get stopped out on this morning. We're going to get some volatility come through in a sec. Could this hedge through that low? Could this go through that low? Could do what it likes, but I don't like my stop loss placement on this at all. That's a stupid place to put a stop, but I can't put it down there. It's too much risk. And we missed that hedge. What I should have done is just gone, oops, missed it this morning and walked away. But I do like the idea of a bounce to the upside. So we'll see what happens. Franco, just scalping Euro US dollar. Day done. Good man. Just missed a stop loss that crashed thousands of accounts on Euro US dollar. Okay, so news is out. Come on, Financial Juice. Why are you not feeding me the news? My news feed isn't working for some reason. Weird. I don't seem to be getting it. Anyway, 46. So, positive. Right, okay. So it is a different result for services. Manufacturing, pretty much as expected. Services increase. So mixed bag for the euro. Doesn't seem to have an awful lot of impact on the DAX so far. Right, so let's quickly look at Euro US dollar and see what that's done to that. So big spike down into what? Support. Funny that, isn't it? Sell, 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 sell. No, we don't want to go below this level. Okay. So, yeah, nice support bounce. Look for push up into propulsion. Got a little gap there as well on that Euro US dollar, the news the other day, but sure. So, yeah, not a lot of movement on the DAX at the moment off the back of that. It does look bullish, though, still. So, big rejection at that level there. Again, look at this, right? If you drop down to a 1 minute chart, that is a support level on a 1 minute chart. That's an algorithmic support. So the bots that are running will find levels that they continuously retrade at. Yeah. So that is also a support. Works on all time frames. Considering most of this market is run by bots. Right. So we're getting some upside movement. So hopefully we'll hit TP on that in a sec. So when the Fed speaks, it can overcome the normal support resistance dynamic. Yeah, totally. So support and resistance is a technical indicator. So support and resistance are literally just levels the banks and institutions have run out of steam at. So when you're a bank or an institution, and if you are driving the market for financial gain. So there's different types of orders going to the market. You've got commercial desk, you've got the prop desk, you've got the market maker desk. They all have different functions within the bank. The commercial desk just has to execute orders. The prop desk, their job is to be given an amount of money and return a higher amount, make money. Yeah. So if you've started a long move and there are constantly people that want to sell to you, you will keep buying and buying and buying until they run out. When there's, so again, this is what we call a squeeze. This is what the banks will call a squeeze. So squeeze them, squeeze the shorts. A short squeeze is where you're basically just buying everything and you're squeezing the short people so that they eventually get out of their orders. When there's nobody left to sell to, you can't buy anymore because you can't buy something that doesn't exist. So then you turn around. So as long as there are people willing to sell, you will keep buying, because as soon as you get to a certain level, you can turn it around and make an absolute fortune. Yeah. When there's a fundamental, you will buy and buy and buy and buy. But if that fundamental means that it's no longer cost effective to purchase the euro and you should now be doing something different, the market will have a flood of orders come in the opposite direction and you get run over. So the fundamentals will always trump a technical level. A technical level is where you are going to find a large batch of orders. So if you're buying, you want more sellers, but you don't want too many sellers. If there's more sellers than you've got buying power, you will get run over. Resistance. Yeah. But fundamentals, when the fundamentals are released, they make a currency either more or less attractive, dependent on how it's going to affect inflation, how it's going to affect GDP, how it's going to affect stocks in certain sectors. There's all sorts of stuff that goes on under the scenes. The scorecarding systems in banks are 50, 100, 150 different elements that go into should we buy or sell something. So the big ones, obviously, as we know, the CPIs, the PMIs, inflation figures, unemployment, all the stuff that we look at, which is red, that will trump any technical level. If you get to a technical level on a chart, yeah, at an area where there are orders and suddenly something changes and you go, crap, we need to get out the motor sector, you will get out the motor sector. It doesn't matter how many are here, there will be more wanting to go through it. So another thing you'll find is if you hit a level and hit it again, and hit it again, and hit it again, it means that there are a lot of people wanting to get through that level. So if you find accumulation at support and resistance, typically it will break. Yeah, because it means that the limit orders are not able to start the next leg up. They will have to get out of that position at some point if they can't drive through. So they will flip short. Yeah. Don't forget, the banks do not use stops. They do not work in that way. They work in a kind of a hedge. It's an always in system that they use. Yeah, it's a stop and reverse system. So When you get to a level, you will sell that level. You will keep selling that level as long as you can until the market goes your way, and then you will make an absolute fortune. If you can't get that move started, you know that the institutions pushing against you are going to win. So what you do is when you get to the other side, you flip long, stop. It's called a stop and reverse. Stop selling, reverse long, because you know the momentum that is stopping you going down will carry through the other way. So all you do is whatever loss you've made there, you wait until it's moved up enough for you to exit and pay that bill. You wait for a pullback and you add where those buyers added. Propulsion. Which is why support and resistance on propulsion works. Yeah, stop and reverse in the banks. That's how it works. That's how the whole thing works. It's a market, same as any other market. So that's basically what you're seeing playing out. But when a fundamental comes along, yeah, it means that whatever's happening will become a stop and reverse order, because the fundamentals will just drive it through. So automatically that drive will be faster, because everybody that's trying to go that way will immediately flip the other way. It's what they call the puke. In the if you hear or you watch anything about pit trading in the 90s, you'll hear them use the terminology puke all the time. Push him, push him, push him until he pukes. And it's what the puke is basically him going, all right, fine, I'll sell it, bang, at a loss. He puked. Puked his order, lost. That's stop and reverse. That's all it is. You're in the market all the time until you come out with a positive P&L and then you walk away. A little bit like we do the opening range breakout strategy. If you're hedging, for example, if you get that big push, brilliant, done for the day. You're done. Yeah. If you get the order, you're done. If you have to hedge it, you look for an area to support or resistance, bounce it. You get out and you stop and reverse back the other way. Then you get out with a P&L that's positive and you walk away. In, out, done. Your job is to return a positive return every day, not to make 1,000 million quid or whatever. Come back with a higher P&L. That's the job of the banks. That's what they'll do. They don't need to do a lot to do it. One move is all they need. Right. Right, just waffling this morning, aren't we? We haven't even looked at the FX markets. Indices are moved by the underlying companies, but sometimes speculative traders can move it. It's all speculative. Well, I think I just explained that. There's multiple desks. Commercial desks, their job is to transact commercial orders. So on the euro US dollar, for example, it doesn't matter what the instrument is. Wait one sec. Yeah, so it doesn't matter what the instrument is. Basically, the commercial desk is given a book of orders in the morning or whatever, whenever it is, to execute. So they will have 25 million to execute euro US dollar exchanges for corporate accounts. So corporates will come to them like Microsoft or Tesla or whoever and say, we need X converted into Y. And their job is basically to do that. And they will try and get the best rate possible. But at the end of the day, their job is to get that 25 million off their books and back onto the other books on the other side. Yeah. Commercial. They don't give a monkeys whether it goes up, down, left, sideways, or whatever. It could stay the same for all they care. Their job is to earn a commission for transacting for a corporate account. Prop desks are the money makers. Those are the guys that basically are given money to do speculative trading. So speculative trading is speculating on price movement up or down. The speculative desks have some mates called the commercial desks, and the commercial desks have a load of orders to execute. So the commercial desks pass to their market maker desk and say, we got to get this executed. Can you go and find some people to buy, sell it, please? The prop or speculative desks are watching what these guys are doing, because if those guys have got 25 million to execute long, do you think it's going to tick up or down? Up. What do you think the speculative buyers might do when that order's placed? Buy and then sell up there to make money? This is why the banks cannot fail to make money. If you've got the power to move it up, you cannot fail but to make money. If we right now were sitting here watching this and I said, in 5 minutes, guys, I'm going to press the button and drop 25 million into this market, would you rather buy it or sell it? That's how the banks operate. They make money. Their job is to make money. Why do you think the banking sector is one of the richest sectors in the world? Yeah, just because you can't fail to make money. It's the same as, people like Elon Musk. I think I might build a rocket and go to the moon because I've got 25 quadrillion pounds here. What's it going to cost? 10 quadrillion pounds. Yeah, whatever. Do it. And it will happen because he can make it happen. The banks have a never-ending supply of cash. If they want something to go from A to B, they will just push it. And as long as there's not enough resistance from other people in the opposite direction, it will happen. The other thing you need to bear in mind is, as I just said, there's 10 banks that operate this market, 10 big institutions. So let's say, for example, we've got HSBC sitting here needing to execute 25 million long. You'll have Barclays up here who will have a customer of theirs needing to execute 25 million short. Do you think these two would find it beneficial to talk to each other? I need to execute this. Yeah, I need to execute that. All right, let's agree on a price. Balance. When that order is executed, we no longer need balance. Right, speculative traders, let's see if we can push it up. Let's see if we can push it down. Price discovery. New order of balance. These guys talking to each other, yeah? That's literally how it works, which is why you haven't got a gnat's piss in hell hope of understanding which way the next candlestick's going, because it's not in your control. It's in their control, and they will do what they want when they want with whatever they want to do it with. Just the way it is, yeah? So you can pick any system or strategy in the world you like. It ain't going to work because the banks are the ones moving the market. We do know, however, that support and resistance works. Yeah, but it's not an exact area, is it? It doesn't hit it to the pip. Look, that resistance, that resistance, that resistance, that resistance. That is all basically the banks selling this level. But they didn't do it at that price, that price, that price, and that price because they wanted to. It's just where they found the liquidity and they ran out of orders in the other direction, and basically this move started from. So around that area, there's a load of orders. When we get back there, this blue line, there's a load of orders going to trigger because that's where they are. We know they're there. We can see them. We can see there's orders here. When we get back to there, we're going to find a bounce out of it. Probably. Not necessarily, but high probability. Why? Because this is where the banks are selling. When we get back there, if they want to make money on that order, they have to sell it again. Propulsion. Look at that propulsion gap. They sold hard. We pushed up into it. We sold again. We pushed up into it. We sold again. We pushed up into it. We sold again. Why did we sell again? Because that's where we're selling. Why? Because that is a previous area that was support, and now we've got a price discovery to the downside, so we use that as resistance. Support, resistance. Support turns into resistance, and vice versa. Always has, always will. Unless something changes, but unlikely. Close everything should be minus. Close everything should be minus, Carrick. Did you spot it? Did you spot it? And I didn't see it. Sorry, let's go back. Let me load that set file again. I think you might be right. I think you are right. Well done. Good spot. Are you still in here, person that's got the problem with the set file? Ta-da! Carrick fixed it. See, even the bloke that built the thing doesn't know. But as I've said to the person that had the problem, if you'd have read the manual, you would know, because the manual explains whether it needs to be pluses or minuses, etc., etc. He says, as he goes and looks at the manual and realizes he's left that bit out. But anyway, there's your problem solved. Well done, Carrick. Good job. At least someone's on the ball today. Told you I was late this morning. Rajiv, morning. Pound yen, very interesting. Well, yeah. If you got into it yesterday on that one, you're probably out. But don't know on the yen. I wouldn't be wanting to long the yen. I'd be wanting to short it. That would be where I'd probably want to short it as well. However, I'm hoping the pound's going to rally today because I got a long on it. Oh, crap. Already stopped out on one. Oh, this thing's... can't beat this pound at all. Another stop out, another 1%. one more crack. We got news today. I'm just holding out for this news today, basically. This afternoon, we've got the 9:30, we've got the PMIs for the pound. If they come out as bullish, we should hopefully get a rally on it. And if we can get that rally started and then we can get negative PMIs on the US this afternoon, pound US dollar is going to be up here in this propulsion, which gets me out. And I just want out, basically. I want flat on it. But I'm just hemorrhaging cash on aggressive drawdown control on this thing. It's just not stopping. It's the worst squeeze I've had. It is now officially on my books as the worst squeeze I've ever had. Nothing I can do about that one. Harold just said that, yeah. One question about MRA EA. Yesterday you said we set close or win X money in profit according to the size of the account. For 1K account, it's 15. Well, it's not. It's whatever you want it to be. Yeah, Robert, it's all mentioned in the manual. Everything's mentioned in the manual. So, and in the video. I think you're trying to be too specific, Robert. Yeah. The market reverse alert CA is a Swiss Army knife. I give some set files as an example. There are approximately 25 million system parameter permutations in that EA. Yeah. I think there's probably more than that, actually. There isn't a way to use it. You use it how you want to. If you want it to close out when you get into profit of a certain amount of money, do it. What that money is, you choose it. If you want to use ADR as your exit, use ADR as your exit. If you don't want to use a basket exit and you want to set your TPs manually, do that. Yeah. I don't teach this is what you do. I teach a methodology of how to get in and out of the market without taking losses. There is no right or wrong way of getting in and out of the market without taking losses. You could use a 0.1% profit, a 0.2% profit, a 1.5% profit. Use whatever you like. I produce set files to show people ideas of strategy. Now, as I've said many times, there isn't a strategy that works all the time. It's not possible to have a strategy that works all the time because the market is different every day. So you've got to use whatever you want to use, yeah? But the manual explains, the whole point of the manual is to explain, and the video, when it loads, this video is 2.5 hours long for a reason. You've seen how many inputs there are in the market reversal alerts EA. Yeah, there's a lot. So the whole purpose of the video is that I go through every input in the EA, what it does, why it's there, more importantly. This is as good a lesson in position trading as you'll get. Watching the video about how the EA mechanics work and why the options are there explains why I trade the way that I trade and what the possibilities are. Yeah. So it goes through every input, what every input can be, should be, and is probably a best way to use it. But there isn't a right or wrong. Yeah. So if you want to get out, if you're using £1,000 account and you want to get out with £15 in profit, do it. If you want to get out with 25, doesn't make any difference. It's just a different number. Is it going to hit it or not? No idea. You could get out with 100. Yeah. Go for a 10% profit on your positions if you want to. There's no, there isn't a right and a wrong way of doing anything. Everything is there to make it easy for you to mold this into the way that you want to use it. So don't use that. Don't use that. It won't get you out of the position. It will get you into the trades and it will never get you out. So your job is to get out when you want to get out. Is your P&L big enough today to get out? Yeah, brilliant. Do it. That's the way I'm using it now. I'm not setting any TPs on anything. I'm just doing it manually. Yeah. All of these positions that I'm in, I'm looking for areas to get out. I would much rather get out of this when we get up to here. If we can get up to here on the news and it looks like it wants to sell, I will exit the whole lot there. I will be taking a loss on it, a horrible loss. But the EA, if I set it to get me out at 1.5 ADR, will get me out at exactly 1.5 ADR. Oh my God. LPFX is back. Bye Help EFX. Been nice knowing you. I'm sorry, I'm going to report you. I might report you for something really nasty this time. Child abuse, pornography. What should we? Hate speech. I think hate speech probably best thing to report you for, because you're basically trying to rip people off. So bye. They've been back every day this week, Help EFX. We haven't seen them probably, what, 2 months, 3 months? Now they're back every day. They're obviously run out of people to scam. Anyway. You don't have to apologize for not reading the manual, Robert. Nobody reads the manual. We're men. Yeah? We don't read manuals. What we do is we use, it doesn't work, and then we go, why didn't that work? So don't apologize. It's the norm. But, you know, this is an incredibly detailed document, and it tells you how everything works, the logic, why not. You know, it goes through everything in very, very intricate detail. So it gives you all the strategies. You know, it never ends. It's a good read. Go and get a cup of coffee. If you fancy a snooze, go and read the Market Reversal Alerts manual. Guaranteed to work. Right, should we do some analysis? Still long on the DAX. We're not going anywhere, though. ADRs. We'll get there in the end, won't we? We will look at some charts in a minute. Aussie dollar yen. We're starting with the ADRs. So all these yen pairs rallying at the moment. So just because obviously everything we're going to look at here. So that's a yen pair. Those two are yen pairs. That's a yen pair. That's a yen pair. That's a yen pair. So we've also got movement on the New Zealand dollar. Euro New Zealand, pound New Zealand, New Zealand Swiss. So we'll cover the yens basically. Obviously, you need to start with the US dollar yen because this is the one that's causing the problems. So for the US dollar yen, we're looking for an intervention from the Bank of Japan. Last intervention we had was there. That failed. Second intervention was there. Third intervention was there. That one and that one worked. We got warned about intervention there. Market reacted. Market pushed back. We got warned about intervention again. They pushed up. We got warned about intervention again. We pushed up. Now we're getting warnings daily about intervention. So 600 ADR move to the downside is either going to come, or the market is going to do what it should do and start powering the yen up. So for the US dollar yen, this is the key because this is the one that the Japanese are watching because their transactions are done in US dollar overseas. So at the moment, as you can see, we're up at ADR. We've hit ADR today. We are gradually, ever so gradually, just about breaking it, sitting there for a few days, testing the water, just about breaking it, sitting there for a few days, test the water, just about break it, pushed back, up here again. So this reversal alert we've had a few of them. One of these is going to be potentially the start of a multi-day, possibly multi-week drop, or it's just going to fail again, and the Japanese are going to talk about intervention until they press the button. Could be as soon as next week. So 150 was the last intervention that actually moved the market. So as you can see, we've got sort of 350, 400% ADR movement towards the upside there. So you're looking about 300 pips or so from where we are, 350 maybe. No, 200, sorry. 80, 160, 240, yeah. Sorry, 3 ADR. So that's basically kind of the last chance saloon, really, if you like. So we'll see where we go. But we are at ADR at the moment and we are rejecting. So good chance we may well start another move down from here. If we get negative PMIs off of the US this afternoon, and if Canada has retail sales which are dropping, that will bring down the US as well a little bit. We'll find that this will come down. So all of these yens, we had that lovely move where we got a little bit of yen strength which came through, all been undone by what's happened overnight with the news coming out of Japan. Ueda obviously hasn't rallied the market. So it's the CPI, obviously the interest rate never changes. They're saying that the CPI is forecast potentially to flip and go up. That usually is bullish for a currency. Yeah. So You see there CPI year on year is 3.1 on a forecast of 3. You would typically find you get a bullish move on a currency, i.e. Japan powering up, everything coming down against the yen. We haven't had that overnight. So watching these resistance levels, 150 ADR is previous day's high on all of these. So you can drop down M5, wait for reversal alerts on all of these yen pairs, which are extended. And they've all got a good chance of dropping. We've already had the pound move. Euro, that's already happened as well. But that's obviously off of the PMI figures. We've got the PMI figures for the pound in half an hour, so that might get undone. But Swiss yen, we've already had the reversal alert, so that's come straight off of ADR, straight into ADR and reversed M pattern. And we've got, Aussie dollar yen. That one's still rallying. So the Australasian pairs will tend to hold up better usually against the yen because it's in that area. So they're all good ADR reversals today, all of these yen pairs. However, if that PMI comes out as a positive for the US this afternoon and that US does rally up, these will all probably continue higher today. So what you'll probably find is not the Aussie yen, it's a really bad example, but all the others. We'll get that rally, which will continue out of the highs, and then we'll just accumulate. And then next week, we'll wait and see what happens. So it's kind of hinging on the US dollar yen at the moment as to whether or not they make that run. They haven't managed to get through resistance at the moment. So limits are triggering at ADR. We've moved up. We've exhausted today's move. We've also found a load of sellers in that area. So we're either going to accumulate up here and wait for the PMIs and then either rally or dump, or it will just continue, or it will bounce. We never know what's going to happen, obviously. If we'd do it, wouldn't we? But so that's the way I see the yens at the moment. I'm still not interested really in longing them. I will take shorts just because that intervention comes. Yes, I'd like a 600 ADR move to the downside, please. Yeah, I've got a buy on the Swiss yen. I don't really want it. I'm just going to break even that one. I don't want to be long. The Swissy, however, has got this to undo. So the Swissy could actually get up here today and TP that. If that TP's fine, I'm done. But everything else, shorts. So the only other ADRs we've got today are the New Zealand pairs. So Euro New Zealand come crashing down straight into support at ADR. No idea what that line is. So your monthly levels are down here. Again, lovely example of support. We are tapping into potential resistance levels here. So that old propulsion gap there, which broke that high, has been tested already and done. Looks like we're breaking through that level. So anywhere in there, it's just an area of chop. You could find there's a bounce. So obviously with ADR, it's an intraday strategy. So what you're looking to ideally do is get that reversal and get that pullback on the same day. So we pushed back down. That's a really ugly candle, but your reversal alert's not going to trigger until all the way up there because this new spike has driven down. So it's going to be a hard entry on this one. But yeah, I mean, it's not really a trade, is it? You can't get into that. It needs to push down and make a new low. And then we'll hopefully get a reversal alert tighter, which you can take. 9 o'clock, that's the Euro combined, just come out, which will be mixed, I suspect. So we're 43 down on manufacturing, and we'll probably be positive on services. Yeah, so mixed. Yeah, not a lot of movement there at all. Not looking good on the DAX. It's not. It's just not got anywhere. So this is a prime example of what I was saying earlier. Yeah, we've triggered some limit orders down here, obviously off of that level. Very strong move. A lot of orders triggered. Managed to push up. They haven't managed to sustain that move. So remember what I said about an accumulation at the lows. If you get an accumulation at the lows, it means that yes, we had a load of limit orders trigger, but there are more sellers in the market than there are buyers down at this level, because if there wasn't, we would be gone. We haven't. So we're finding it hard down here. So you're going to find an area of accumulation starting. That can still break in both directions. But what we're getting at the moment is just negative move on the indices, because we're getting a mixed bag on the euro. If the euro tends to rally, the indices will drop. Yeah. So if you look at what the euro is doing at the moment, yeah, we're having a little push. So as we have a push on the euro, the indexes drop. So not really moving anywhere today, anything on the eurozone, because the news is all mixed. So the fundamentals are mixed. Therefore, there's no pressure to buy or sell in any direction at the moment. So just a sideways mess. So it'll either get stopped out on that, or it'll hold this level and rally. But I don't really want to go short, not into that level. If it breaks, it breaks, and it would have been the right thing to do. But I'd rather not try it today. So Euro New Zealand, we've got that one. Pound New Zealand, again, big drop down. We're beyond ADR. So your 5-minute reversal alert, fairly tight on this one down there. So if you come out, we've got the reversal alert will trigger there. Potentially a move up. If you look at where we are on the hourly, again, this pound is struggling like crazy. We're down at these levels of support. Yeah. Previous resistance, support. This whole area here where this propulsion gap is, decent level. Failing that, we've got 3 further levels to the lows at around about 200 to 225. So again, from a position trading perspective, you want to take an ADR reversal on this. When you get the reversal alert, hope that we get the pullback on this move, and you're out. If that doesn't play out, it's going to drop. So you can add a second position at that level. You can add a third position at that level. So if this level of support doesn't hold, probably that one will. If that one doesn't hold, probably that one will. The likelihood of it moving all the way down to there without having a profit take move on that doesn't happen very often. However, this is the pound at the moment, and it's obviously not. It's defying gravity, the pound at the minute. So that's how you would turn an ADR reversal into a position trade, basically. And that's what the EA is designed to do, is to get you into those positions and manage the whole thing for you automatically. So that's pound New Zealand. And New Zealand dollar Swiss is the other one, which is obviously going to be hit to the upside, because it's the New Zealand dollar that's causing these New Zealand dollar moves. So there's an ADR hit to the upside. You've got a 5-minute reversal, which is going to go in there. So ideally on this one, you get a little pull down, push up, and you'll get a tighter reversal alert up there. And then go for half an ADR to the downside. There's quite a few weekly ranges hit as well. But the weeklies, obviously, we are on Friday. So taking these on a Friday, you've only got today for the movement to happen, obviously. So Euro Swiss, as we know, we had that Swiss franc move yesterday where we basically got the rate didn't increase, which was forecast to increase, which is very unusual for the Swiss. So I got out of most of the Swiss francs. This could be a continuation on this. There could be further weakness coming on the Swiss franc. We've just had mixed news on the euro, more negative than positives, as you can see there. And the Swissy moves with the euro as well. So if we're going to get more euro downside today, that Swiss franc will probably drop a little bit further. But we'll see. Pound in half an hour anyway. That does also affect the euro. RSIs are flat on the hourly. We had quite a few extensions yesterday. A lot of those have played out. So bear with me a sec. Need to adjust some stuff over here. talk amongst yourself for a minute. Okay. So there's nothing on the hourlies. We have got some 4 hourlies to look at. Roman, what do you think about prop firms after my Forex funds got shut down? Not getting involved in props at the moment. All props use demo accounts. There's lots of problems with my Forex funds business model. And after investigation, a lot of these prop firms have the same business model. So I mean, it's not been a secret that they don't fund you. Hopefully it's not. Of course they don't. That's not the business model. The business model is to sell you a demo account for $500. Yeah, that's the business model if you think about it, isn't it? And then put a load of rules in place that they know will trip over 99% of traders because strategies fail. So the business model has always been for my Forex funds to take 20 million a month in fees for demo accounts, and anybody that's lucky enough to get through and get paid, give them some of that cash, pocket the rest. The problem with my Forex funds is the same person owned my Forex funds that owns the brokerage. So he had 100% control over your account and the manipulation of your account. So if you press the long button and he didn't fancy executing your order, don't do it. If you're getting close to a stop loss, we'll just spread him out. Why? Because we can. What's that do? Blow his account. What's he going to do now? Pay 500 quid more. That's the problem. The guy basically had 100% control over everything that happened with the account that you got given. Now, looking at all these prop firms, a lot of them are set up in that way. The ones that aren't are using third-party brokers, which is fine. But the problem you're going to find is they're going to get investigated as well. And it may be a case of the CFTC, the FCA, and all the big regulators for financial markets will go, don't like this. Looks like you're ripping people off. And they'll just shut it down. It will become illegal to run prop. It will get pushed through very quickly. So what you'll find as well is my Forex funds, there'll be a class action lawsuit set up by some law firm somewhere. And that 300 million, they'll be after it. All the other prop firms out there will be crapping themselves. So I think you're going to find a little bit of a house of cards, and they will all be very, very swiftly disappearing. They've all had to stop paying you out through deal. Yeah, the main way that you set up with prop firms is as a contractor through deal. You can't do that anymore. So now they've lost their payment mechanism. They've got to pay you in crypto. Why? Because it's all hidden under the radar. It's all just any money you put into prop right now, I can probably say with 99.9% certainty, you won't ever see it again and you won't ever get paid. There's people in the Telegram group at the moment with Fidelcrest. Fidelcrest have been around, well established for multiple years. I thought they're a pretty good company. They're not paying people. Why? Don't know. Radio silence. For me, it's just, I'm not interested at the moment in any prop firm until this My Forex Funds thing's sorted out. When it's sorted out, I'll look at the industry again. I've been paid by my Forex funds. They owe me money as well. I'm not expecting to see that money. So there's, I was part of the problem, if you like, in the fact that I got paid. I lost a lot of money. I lost a lot of accounts. I blew accounts. I regularly blew accounts live on stream. That's part of the job. You do 10 accounts, you get 2 or 3 of them through. 1 or 2 of those will get over the line. You get paid. As if you get paid more than you spent in evaluations, you're a winner. That's the job. That's the business. So, I've been paid. So I know it was legit. But what wasn't legit was the manipulation. The way that I trade doesn't give much option for manipulation. So I'm in and out in scalping with decent stop losses that, they just don't get hit. So I found it very quick to make money. A lot of people were trading hourly charts and holding overnight, holding over weekends and getting spread out. So he was basically going, you're close to passing or you're close to getting paid. I think I might spread you out of the market tonight, and pop, you're suddenly like, what? I was just about to get paid. I've blown the account. Yeah, sorry, you hit the daily stop loss. But price never got there. Look at my other chart. Sorry, this is our brokerage. That's the problem. That was the problem. That's been the problem for years in all brokers. Look at this, New Zealand dollar. Yeah, I can pretty much pick any New Zealand pair and show you the problem. And brokers do this all the time. It's the overnight spread. Yeah, it's a known thing, and it's happening in brokerages as well. All brokerages. That is where price closed. 5 minutes later, it opened down here, and they spread the market down there. Why? Because everybody's liquidity was here. Oh, sorry, did you lot that went long lose your account? Oh, sorry about that. You signed a contract that we could execute for you at any price. This is the price. You've got no leg to stand on. Within prop, you've got even less leg to stand on because it's not real money. Yeah, this is, people are surprised at this. I'm a bit surprised, but I'm not surprised because brokers have been doing it to me for 15 years. Every bloody night. This is why I don't use a stop loss, because every night, pretty much, that night they didn't, they'll do the same thing. They'll spread the market. There you go. There's a good example. That's where the market closed. That's where the market opened. Yeah, ADR on this is 123. That movement, that spread is 280 pips. That's a quarter of the average daily movement of this instrument in one candle overnight. Why? Everybody that longed it there, and there was there. Not anymore. They're all liquidated. That's the business. If you want to make money, you become a broker. It's just the norm. So until they, this is, when the regulators, I say the regulators are going to look at prop firms, they're going to say, right, you have to use a third-party broker. You have to have segregated client accounts money. You have to prove that you've got X million more than the amount of money that you are funding for. All of a sudden, most of those prop firms are going to fall by the wayside because they haven't got that. $250,000 to set up a brokerage. They haven't got it. So the industry's, for me at the moment, not dead, but it's certainly dormant. And I just don't see the point in putting another 3 to 5K a month into it. Might as well put it into my own account, because then I know at least I've got control over my own funds. We'll see. It may change, it may not. And, as for the regulation argument, everybody keeps saying, well, if you go with this guy because that prop firm's in Europe, they're not going to get touched by the CFTC. No, but the FCA will be very interested in them. Well, that one's in the Seychelles. Well, SISEC and everybody else will be interested in them. Every country's got a regulator. CFTC, they're just the first. Canada, they're all going to do it. So just be very careful. If my Forex funds had kept their website holding page up and communicated, it would be a lot less of a problem. The fact that they've vanished off the face of the earth and their domain name has disappeared just tells you they're on the run, aren't they? He's on the run with $300 million. How many more of them are about to go on the run with $300 million? FTMO look like a great company. Do they fund people with real money? No one's been able to prove it yet. Yeah. People say, oh, yeah, they do. They definitely do. Do they? Prove it. Look at their client accounts. Look at their reported accounts. There's nothing about any fund segregation in there anywhere. Yeah. If they were funding you with real money, they would need to be able to cover all of that loss on every single penny of that account and some to cover the leverage. Their accounts don't show that they have that much money compared to the number of traders they say they fund. So it doesn't add up, does it? What do I think about Lux trading? Seem to be different. Prove it. I'm happy to look at anybody, Andrew, but if you can prove to me that they fund you with their accounts and they can provide me with segregated accounts, fine, they need to prove it. It's not a case of I need to prove I can trade to these people now. They need to prove to me that they're actually going to do what they say they are. You've got to be skeptical in this industry. And I think with prop, everyone's got carried away because they've seen people like me making money and seen other people making money out of prop online. and it's been like, oh, this looks good. But the wheels fall off. Binary options, really? You can earn that much money out of binary options? Yeah, those two people did. The other 999,000 didn't, though. It's a scam. Anyway, CAD Swiss, AZ. So CAD Swiss, we're up at resistance at the moment. So this obviously is a previous area of interest. Yeah, support, accumulation around it. Used it as resistance a couple of times, used it as support again, used it as support again, slammed through it, bit out on the resistance. But this whole area here, this propulsion gap, is where we broke that area. So that is potentially where we're going to get the pullback starting. So the big question today is Canadian retail. Sorry, not Canadian retail. No, is it Canadian retail? Yeah, Canadian retail and US PMI. We know the euro's been a mixed bag, so the Swiss franc's undecided. So what we're going to get off the CAD retail and the PMIs for the US. So it looks like a good level to me. We've got a nice rejection so far at the previous high from yesterday. So limits have triggered. Yeah, that propulsion gap, this one here, that's grayed out. We certainly found the sellers there, didn't we? And we certainly refound the sellers here today. So I don't know. Oil at the moment, we seem to have gone back into a multi-day accumulation again. So we're in day 6. I think day 6, 1, 2, 3, 4, 5, 6. Yeah. So we're in day 6 now with no movement. This pullback and rally didn't manage to get any more steam and break that high. So the market structure is actually holding short. Yeah. And we were looking for that 38 retracement. So it's still on the cards. Sorry, that's the 50 on that one, isn't it? So we're looking for this level to be a 38 back into this accumulation. So I think there's still downside on oil. It looked like it was going yesterday, but it didn't manage to make it. So if we've got that downside on oil, that's going to bring Canadian dollar down as well. So it's all looking good because of the extension. Look at, I mean, this is just, again, you know, I'm in the pound US dollar. This is parabolic. And it has not just been parabolic for a bit. It's been parabolic for weeks. It's unusual to see this much strength with absolutely no profit take move whatsoever. So it's when are they going to run out of people willing to sell this thing? Or when are they going to find a larger batch of sellers than buyers? And it's this level. This is our next resistance. We've got massive movement going on in this New Zealand dollar today. So yeah, I like it up there. It's a good spot. Pound New Zealand coming down. Euro New Zealand still dropping. New Zealand rallying. New Zealand dollar yen, we're tapping straight into 150 ADR, which is previous day's high. So that's the high of the week, just about to go on New Zealand dollar yen. New Zealand dollar Swiss is out the highs. Big moves on the New Zealand. Aussie's rallying as well. Look. So Australasian pairs very, very strong. Yen pairs weak. Philip, been doing a bit of net research on them. They say they fund live after evaluation. However, their rules are a bit sketchy. Their risk desk holds all the cards on whether you pass or not. With Lux, is that? Yeah. I mean, the thing with Lux is they are promoting themselves as a traditional prop firm. So traditional prop firms are desk firms. Yeah. I'm not so sure. Isn't this the company as well where you have to trade their way? You have to use their course. Can't remember. It's just, it stinks of a scam, doesn't it? They're selling the dream. Isn't this the one where you've got to go and do the course? Yeah, you've got to go and do the course or something, haven't you? And then you've got to trade their strategy. So it's a bit more like a traditional prop in the fact that you go and buy a desk seat, and if you can produce more money than the guy next to you, the guy next to you gets sacked, basically, which is what he's kind of saying about the risk desk. Yeah. Go over your trading style and advise you on the use of stop loss, use of leverage. Basically, you're not doing it right. Do it our way or piss off. Yeah. Use your own money. Much better. Stick with futures if you want to do prop. Right. I'm not even sure that's the right thing to do at the moment. The problem with futures is there's no regulation on that either. Yeah. They've got to be able to access the data. They've got to register you with the CME, but you register yours. If you think about it, what you do when you go through a futures prop evaluation, to be able to access the platform and access the data, you need to go and sign up with CME Direct. Nothing to do with the prop firm. Yeah. They require you to have data feed. The CME, as far as the CME is concerned, they're dealing with you. That prop firm, who's to say that they're funding you with anything? When I think of the futures firms I've traded with, Lilu, Apex, funded trader, well, I can't remember the name of the other one. And there's one more with not FTMO, the other one. Can't remember the name of them. What's the other one? Top Step. Yeah. At not one point in there are you ever told that you're getting an account that is funded with live cash. They all reserve the right to copy your trades into their investor pool, which may or may not exist. Yeah, it's still too woolly. I could set up a futures prop firm tomorrow, a website where you basically buy a demo account from me that I will provide you with, and you go and get a CME data feed. Does that make me regulated? No. People are thinking there's regulation involved because you're accessing CME data, but you're doing that privately, not through the prop. So I don't know. I'm just skeptical about the whole thing at the moment now. I'm in an evaluation now, but their model looks different, and they state they use real money. The rule are, however, tough. Yeah. Maximum drawdown is 4%. See, that would make more sense, because that if I was setting up a prop firm today, right, and I was giving you 100 grand to trade with, if I put a risk limit of 10%, I'm basically risking £10,000 of my money on you, right? And what have you done to give me the confidence that you're a good trader? You've traded for 3 days with very high lot size. You've passed stage 1 in 1 day, and you've passed stage 2 in 2 days. And I'm going to give you 10 grand of my money based on 3 lucky days worth of trading. Yeah. A proper prop firm would look at you and say, right, I need 30 to 90 days worth of trading history. I need to see that you're using the same strategy day in, day out, that there's an edge in that strategy. If there is, I will give you 5% to muck about with, because your overall drawdown on that strategy looks like it's somewhere around 7. But that's too much for me, because I'm giving you 100 grand. Think about it from an investor's perspective. They're used to getting somewhere between 3 to 5% returns a year. If you're returning 10% a month, there's no investor on the planet that's going to touch you. Business model just doesn't make sense. Now it's all unraveled. You look at it and you go, yeah, of course, it's a load of rubbish. Same with futures. Futures is still doing the same rules, isn't it? It's the 5%, the 10%. There's no investor on the planet that's going to give you $1 million and risk that much money. They're not going to risk 100 grand on you just because you traded well for a week. Yeah, you go to a prop desk and ask for a seat, they will charge you $3,000 to $5,000 a month to sit in that seat, and they want a year's worth of back history. That's a proper prop firm. These ones online are kind of like, we're not real, but we're using the same model as a real prop firm. Yeah. So I'll be very skeptical about the futures still. Just be careful. But if you're getting paid, you're getting paid. That's great. But people like Apex, great firm for futures. Yeah. Look great on paper. Yeah. But you don't get paid for 3 months. Right. They pay out regularly every couple of weeks, but you can only have $1,000 of the 25,000 you made. You got to wait 3 months to get the whole thing. Why? Because they know damn well you're not going to last 3 months. There's always a rule to make sure that they don't pay you. Sorry, don't want to be overly skeptical, but that is the rules. FTMO says in their FAQ that all accounts are demo. There you go. At least they're up front. Thanks for subscribing, Anise. Welcome aboard. Morning traders from Pontevedra. Afternoon, Blue Trader. You're late, I know. Yeah. Let's just have a look at what's happened to the DAX. Still, oh, what? Check that out. Stopped out on one position, not stopped out on the second position. Why did you not want all my money, Mr. Broker? Why did you only want half of it? We're not going anywhere, so I'm going to hold the second half. See if I can get 2 to 1 on it. Just not going anywhere, is it, today? Wayne, pound CAD, US dollar Swiss. We've got 3 minutes to the news. Pound CAD, we'll have a look at pound CAD. Because, actually, let's have a look at US dollar Swiss first. Because we'll look at the pound CAD when the news comes out. So US dollar Swiss, very tricky. The US dollar basically has been a tricky thing for weeks, we know. It's grinding horribly. US dollar Swiss obviously moved to the upside. I got out of the US dollar Swiss yesterday. Literally, it was a 1 in, 1 out from the H1 mean reversion, straight in, straight out, done. Made 50% retracement, but they are holding this level. So this Swiss franc is still very weak. The US dollar, obviously, we'll wait and see later. We'll know this afternoon what's going to happen with the US dollar. The PMI figures will either rally it or dump it. It's just not really readable, the US dollar at the minute. They are not giving us any information, bullish or bearish, and the market seems to want to continuously grind higher with it. So until there is some kind of fundamental that shifts that, the US dollar will probably keep grinding higher. But we've got we've had no volatility for the last 8 weeks, pretty much. So volatility seems to be picking up now. The ADRs over the next week, hopefully, because we're end of quarter next week, we should see some more volume coming through. So hopefully we're going to get the ADRs picking up a little bit. As long as that happens, that's going to then put market structure back into play as normal. We have, this is my US dollar yen. There are ways out of everything at the moment, but not out of everything, obviously, but out of a lot of stuff. So as long as the market structure gets back to normal, we get that volatility coming back in, you should be able to trade everything in both directions still, because nothing's got a fundamental bias. Everything is stuffed. Everything is stuffed on interest rates, everything's stuffed on inflation, everything's stuffed on GDP, and everything's stuffed on unemployment. So if they're all stuffed, they're all just going to do that, flip-flop around. So the yen is obviously the anomaly at the moment because it's absolutely getting destroyed, but that will change when the intervention kicks in. And it looks like the market is starting to pay attention. Pound New Zealand, 150 ADR, negative pound, I can tell, can already tell. So pound CAD, manufacturing is green, services, which is our main export in the well, it's not an export, is it? But services is our main thing, banking in the UK, negative. So probably bearish pound. Stopped out second. Just getting crucified on this. So this is now my 6th or 7% loss on this. I've got to close it out today. I will wait until end of day and then shut this. It's going to be a losing month, unfortunately. But so yeah, negative pound on the news. We'll see if it holds up. If it holds this level, we've got half a chance of getting a move started. But as you can see, there is just, it's not a case of being able to get a move started on the pound at the moment. If we're getting negative news and it's holding its ground, great. But all it's going to do is that, isn't it, at the minute? Unless we get some negativity on this US dollar, this pound's got no chance at the moment. So we're waiting for the US news. New Zealand dollar yen, 150 ADR. So we're still getting a rally on the New Zealand dollar. That's just tapped out of, previous day's high, 150 ADR. So drop down on that, M5. That's a really nice extension. Really nice move on this. We haven't had a reversal alert on this yet. Aussie dollar yen doing the same thing. So yeah, big moves on that. That's a nice looking short. That might be extended on the hourly now. Not quite. Good looking short on that from here. So huge parabolic move. Look what that US dollar's doing. Again, look, US dollar having another crack. Oh, it's going to be a big one next week. The only hope I've got of making profit this month is getting some shorts on the yen, shorts on everything against the yen, and that thing collapsing. So that's my my plan for next week, but we'll see. So yeah, pound CAD. I think I've got 2 on this at the minute. Again, just ever such a steady decline. First entry was there on the H1M5 mean reversion. Looking for a pullback on that. We haven't had it. We've had another down week, just collapsing. Looking for now obviously we're even more extended. Looking for the profit take move to kick in on that. The problem is that basically inverse. So the problem at the moment is trying to survive through the drawdown because it's just squeezing so hard at the moment. The pound, it's just dropping like a rock. There's not really any fundamental reason for it to drop this hard either. Our inflation has come down ever so slightly. We've paused our interest rates, but other countries have had exactly the same thing. They're not experiencing this. So I'm not quite sure why there's a lot less faith in the pound than other currencies, but there is at the moment. So the pullback will come. Just got to try and survive the drawdown. That's the trouble. So tough. Afternoon. Morning even, Astro. The figures suggest that the UK is in recession. Is it noticeable on a day-to-day basis? We're not in recession in the UK. Our GDP is positive and increasing. I don't know where you heard that. We're not in recession yet. The definition, the official definition of recession is 3 quarters usually in a row as a negative number. And a kind of, well, I mean, it depends how you measure it. I measure the quarterly figures, which most people measure. If you look at year on year GDP going negative, you're in recession, but we're not. The IMF, the International Monetary Fund, if you look at the figures that they're quoting, I think that might be an article. Go away. There we go. Oh my God, stop trying to sell everything to me. Oh. Where's ours? We're in here anyway. But as you can see, the IMF is not forecasting anybody to go into recession. There was talk of it, and we were going to go into a mild recession, like a 0.2-ish type thing. But the IMF revised figures are that nobody's going into recession. However, when you look at it and you can feel it in the UK, there we go. So that was the projection for 2023, look. Yeah, and the projection for 2024. Same as Germany. But that hasn't happened. We haven't got that. we didn't achieve it. What we actually achieved was a plus 0.2. So the projections were wrong. We didn't get a recession. Same as Russia, look. I don't know how they survived. But yeah, I mean, you feel it. But whether we feel it in the UK has little to do with the currency markets. The currency markets aren't interested in whether there's a recession going on. They're interested in, is it a good place to put your money? Yeah, I've got 25 billion to invest. Where should I put it? Who's got the highest interest rates at the moment? They have. Plonk. Right? Whose business is an economy is growing and I'm going to get a return on my investment in their stock markets? There. Plop. Who's in recession and feeling the pinch and can't afford to go out for a meal tonight? The UK. And the business is doing well. Yeah, banking sector is doing amazing. Plop. Yeah, they don't care about recession. GDP is a factor that is used, but it is not anywhere near as important as the return on investment you get on a currency. So a declining GDP, obviously, a forecast declining GDP will mean that banks and institutions will tend to make less money. Therefore, there is less investment. But it's not the case. Look at Canada. They're way worse off. Look at the Swiss. Mind you, the Swiss is a little bit different. It doesn't really work on the same rules. But yeah, I mean, Canada's way worse off than us. But oil is going through the roof. That's going to shift. Yeah, so you can't pay too much attention to that, I don't think. Aussie dollar Swiss, ADR. This Aussie dollar and New Zealand dollar having a very good day today, which is nice because I'm long Aussie US. Pound US killing me. Right. So DAX, we've got no movement at the minute. It's holding these lows. Unfortunately, I got stopped out by a tick on that. Really annoying. On that half a position. The second half a position is at 2R. So I've taken a $730 loss. That TP is 827. So, I mean, if I can get out of this today with a break even on that long, which is $100 or something, that'll do. As I said yesterday, this week and this month, I just want to wipe off, reset, and let's start in October, because at the minute, this thing's a pain in the backside. Every single instrument is just horrible. And all the prop firms went bust. It's the apocalypse in trading this month, isn't it? The figures suggest that the UK's... Oh, yeah, straight up. Mixed bag on the pound, red news. Seems like today's news is all mixed. It is at the moment. We'll see what happens with the US, but we've had everything this week. We've had all the big news already this week. We've had all the interest rates, all the CPI figures and everything. So the market's kind of made its moves this week. But if you look at it, what have we achieved this week? If you look at things like the US dollar Swiss, yeah, we've achieved a weak Swiss franc. We've actually got a move. Look at, zoom out a bit. Yeah. So this is what I've been saying about the volatility. We have August, which is quiet. It's summer trading. Then we move out of August into September and the market tends to explode because the average daily ranges have been contracted. Therefore, we see bigger movement, higher alerts and everything. And then it comes back to normal, and September's where it all starts to kick off. August and September. This is September. Look at the days, yeah? And now look at it. Bang, we got some news. Volatility's kicked in. Yeah, so we are actually getting some movement across the board now. Euro, that one's been moving anyway, but the US dollar, basically volatility. So normal days are a bit slow and grindy and bang, 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 bang. But where have we gone this week? Nowhere. We've pushed down, we've pushed up, we've gone nowhere. So the candlestick this week looks like that. Pretty much. Yeah. So although we've got some volatility, we've had a hell of a lot of news. We've had a very little amount of movement still. So the market's still directionless. This is what I keep saying. we're getting an awful lot of accumulation, a big move on news, an accumulation, a big move on news. We're not making any movement, which is not easy when you're trying to extract money out of the market, because for you to make money, you need movement. So we're only able to make money on news events. And if the news events go the wrong way multiple times in a row, you just get stuck. So hopefully we're going to start to pick up through October. It seems like the volatility this week has kicked in, which is what we want. As long as we're getting mixed news, that's fine. I don't mind mixed news, as long as the mixed news basically means that the market goes somewhere at some point. Yeah. If we wait for that news and then it doesn't do anything, and then afterwards it decides to make a move, that's what we're after. So we've just got to wait and see if we get that. At the minute, as I say, you can see it's flatline. We had August summer trading. Then we were like, excellent, we're coming into September. What did we get in September? Less volatility than we got during the summer. It's just not normal, is it? This is not what we expect. So, you know, to have almost a quarter of nothingness is bizarre. Just bizarre. You know, things change. You experience new things. As I said yesterday, you never stop learning in this industry. I've learned something new. You can experience a September which is smaller than an August. I've never had one. I have now. I guess in the UK, where we feel economic effects is in inflation, where prices have increased. Yeah, I mean, this is what a recession is. A recession is caused by increased inflation and increased interest rates. That's what causes a recession, because GDP growth is economic growth, i.e., businesses making money, selling product, everything going that way. For that to happen, as individuals and consumers, we need to buy their stuff. If they put our mortgages up by 50% or 100%, they put our bills up by 300%, and we don't have our wages increase, we can't spend any money. The economy contracts. And as the economy contracts, businesses have to cut their costs. What do? Cut employees, which creates rising unemployment. Rising unemployment means that the housing market struggles. House prices then start to collapse. People can't buy houses because mortgages are too high. Therefore, the rental market tends to sell off, and there's nowhere to put these people who are unemployed because they can't rent property anymore. And down you go. That's where we are in the UK. But we're not in a recession. If we do go into a recession, we'll be running around the streets with guns and bats, and it'll be like The Walking Dead. Seriously. Crime's on the rise. Why? No one's got any money. You can come and rob me if you want. You won't find anything. I haven't got any. It's just it's the way it is. It's not a good outlook, is it? But I talk to people in the US a lot as well. Obviously in the US session in the afternoon and stuff, but in Telegram and other things. And it's not going well there either. Yeah. I think a lot of the effects are being very much masked at the moment by other things. So that's where we are. Pound CAD is a mile away from the moving average on the 4-hour. Yeah. You know, again, go back and look. Whenever I said this in Telegram the other day, when you're feeling under pressure, or you're thinking, holy crap, this is never going to work, this is never going to end, or whatever your feeling is, you can always go back and look in history and measure. And that's what you do to give yourself confidence. Weekly range has just been hit on the euro pound. Euro's rallying. So yeah, go back and look at history. You know, where are you in relation to the 72 MA? Yeah, so at the moment we're 480 pips away. Look at that peak there. What was that? 515. That peak there, what was that? 470. That peak there was 500. That peak there was 530. That peak there was 497. That peak, 350. This peak, reminding myself, 490. Yeah, roughly 500. Pretty much that's as far as we get before we do a pullback. You get the odd anomaly. 940. That's a big, bad, horrible squeeze. Yeah, that's Liz Truss destroying our economy. So we can ignore this one because that's good old Liz. But, you know, just got to look at history. History repeats. The market cannot continue to push forever because there will just run out of people that are willing to buy this thing, and the sellers will just go, we can't transact. We have to. That's when it all kicks off, and it comes back very, very quick. But you just have to go and look at the past, yeah, and look at collapses like this. Look at what happened after collapses and rallies, yeah. So when you get a rally of like 700 odd pips, that's 647. What happened afterwards? It dropped. And what does it do? You know, Fibonacci trading as such, I don't find has ever been a profitable strategy. But we do pull back to those levels, those 38s, those 50s, those 61.8s. So where are you going from here? Worst case scenario, you're only going to get a 38 retracement, which is a shallow pullback in a trend. Best case scenario, you're going to get a 61.8, which is a deep pullback in a trend. We just haven't got any catalysts at the moment. And this is what we need. And this is why squeezes happen, because there's just no catalysts at the moment to drive that up or that down. Oil's rising. The news coming out economically from the pound is bad. Yeah, so it's just, you just need a bit of Bailey to come out and go, you know, we didn't increase the interest rates. We've chatted with the board and we had 5 members that wanted to freeze and 4 that wanted to go up. Now that we've frozen, 5 of those that said they wanted to freeze, 2 of them have said, I know we wanted to freeze this time, but next time I think we should definitely increase. Oh, hang on a minute. Now we're 7 to 2 to go north. If Bailey came out and said that, the pound would be like, we are going up. But we've got radio silence at the minute as well. So there's just all of these economic factors going on at the moment just mean that we're not getting that trigger that we need. But, you know, there's nothing you can do about it. You have to sit through them or you have to take the losses. Those are the choices we get. But as I said yesterday, every time I get out of a squeeze and say, right, that's it, I'm cutting it, usually the next day or the day after is when it pops. I did it with the euros. The biggest squeezes I've been in have been Aussie, New Zealand, US dollar, Swiss, and oil. Literally within days of every single one of those positions being cut, it popped. Because it was at that point, like you've just pointed out, it's just so far extended. There's just nothing more they're going to be able to do. And I'm just looking at this candle now. It's just reminded me. The very last move you get in an uptrend or a downtrend tends to be an exhaustion rally. Yeah. So look at this one here. You're just seeing this one on the chart. It's not very big, but look at that candle. It tends to be an exhaustion rally where we go to break a new high. So market structure is all about breaking highs, breaking highs, breaking highs, breaking highs, pulling back. Then what happens? We can't break the high. What do we get? A market structure reversal. Yeah. So the last push in a rally tends to be a large candle, which is a failed breakout, which becomes a reversal in structure. Yeah, that's what the reversal alert's telling you. There's a structure break. Got a nice big one in there on the 4-hour, haven't we? Yeah, any one of these big, strong last pushes could well just turn into that structure break. When? Don't know. That's the thing. We can't time it, can we? Peter, problem is people going into debts on credit cards and loans, cars, electronics, etc. So they also pay more interest. Yeah. Yeah. I know. Oh, thanks for the subscription, Anu. Welcome aboard. Didn't see you there. I know I've got friends that have got a business and they put the vast majority of their business borrowing onto credit cards because they couldn't get a loan. Because of the nature of the business, they couldn't get a loan and they had to put it onto credit cards. There's nothing nefarious or anything. It's just the nature of that business means they don't loan to it because it's high risk. But they put all of their borrowing onto credit cards, hundreds of thousands of pounds onto credit cards. The last 2 years, they're at a point where they are literally just paying interest. So it's almost like you've gone onto a mortgage, but you've gone onto an interest-only mortgage, because the interest rates have gone up so much. They literally all they can do is afford to pay the interest each month. They're not paying anything off of their loans at the moment. So every 0.25% that interest rate has gone up in the pound over the last 18 months has been like another nail in the coffin for the business. And we've got businesses and personal, as Peter's just said, people now getting to the point where they've maxed their cards. What do you do next? I still can't afford the electricity and the gas because it's ridiculously high. I still can't afford my mortgage because the interest rates have gone up so high. And all my food's gone up by 30% in the last quarter. I'm struggling to afford that. And my boss is saying that we've got job cuts coming because the business isn't performing very well, so I can't get a pay increase. What do these people do? What can you do? Nothing. Nothing you can do. Get more debt, get more loans, get more credit cards, borrow from family, borrow from friends. You don't have any option unless this thing comes to an end soon. We are stuffed. House prices have come down 5% in the UK in the last year. Halifax have just released their new update a few weeks ago. House prices are starting to come down now. Why? Because it's the only thing left. If the house prices don't come down, we're all going to be stuffed because you can't pay your mortgages. So if you have to sell your house, you have to buy a smaller house. You have to get, my mortgage is big. I'm what they call mortgaged up to the eyeballs because I went for the biggest house I could possibly afford, right? I'm on a fixed mortgage for 5 years, which ends in 2027. If it hasn't come down by 2027, I'm selling up because I can't afford the mortgage. The mortgage has doubled. I mean, I probably can't afford the mortgage, but I don't really want to pay that. I don't want that financial burden. Everyone's got mouths to feed in their families, haven't they? Just servicing debt. Yeah, the debt spiral. That's what you do. You literally live to pay the interest on your debts. So who gets rich? The guys that move this thing up and down. Banking sector. Because all you're doing is you're giving them money. And you still owe them the same amount of money as you started with. So all you're doing is you're just paying them more each month for the facility to be in debt. Not a nice position, is it? Looking ahead, what are some of the fundamental factors that you see causing that fall down the elevator shaft on the CAD Swiss? Oil prices, basically, or Canadian negative news. Or just exhaustion. I mean, it will be exhaustion as well. Yeah, don't forget, the market has to exhaust, has to profit take. There's two reasons why pullbacks happen. It's either a profit take move because the banks have got to a point of we can now get out of these positions, or it gets to a point of exhaustion where it physically can't push any further because there's just not enough people on the other side of the market to continue the move. So one of those two becomes a catalyst, or you run into a brick wall, basically, where there are just more people wanting to buy at that level than you are ever going to be able to drive through. So therefore, it forces you back the other way. Whatever the reason is, yeah, those pullbacks happen. So that's a sell, profit take. That's a buy, profit take. That's a sell, profit take. That's a buy, profit take. That's a buy, possibly part of that move. Sell, profit take, sell, profit take, buy, profit take, continued sell. Yeah. Market structure. This is what happens. You get to a point where either you hit an iceberg, and we don't know whether that was an iceberg or whether it is exhaustion or whether they just made enough money that they wanted to take it. Does it matter? It just happens. You can always look for what is going to be the catalyst, what's going to be the thing, why, who cares? It happens. Why does the sun come up every morning? Yeah, for centuries they were like, woo, woo, woo. Then someone realized, no, we're going around it. Woo. Yeah. Why does it happen? Does it matter? As long as it happens, food grows out the ground and we can survive as a race. Why does this come down? Doesn't matter. As long as it does at some point, and it always has, it'll happen. You can't tell why, but all you can do is look for clues. We know that this level in the past has been an area where we've had a bit of price action. We've got a propulsion gap because they broke through a previous support at that level. We're exhausted. The RSI is extended. We're hitting ADR. There's 1,000 reasons why. Which one is going to be the one? I don't know. It could be that basically HSBC come in today and go, it looks like oil is exhausted. We've just heard that OPEC are going to remove the cap on the Saudis. So the production levels are going to go up. So oil is going to come down. All right, how much we got on the CAD? 150 million profit? Yeah, take it. HSBC could be the reason. Doesn't matter, does it? It's just going to happen at some point. Doesn't help. You know, this is the thing. And I keep saying it, don't I, in here? If we knew why, we would do. But if we knew why, everybody would know why. Therefore, it wouldn't do. It would do different. Because if everybody knew what it was going to do, nobody would do the wrong thing. Therefore, there wouldn't be a buyer for our seller or a seller for our buy. The market wouldn't exist. No one can know why. Otherwise, it won't move. And there's your quandary, the chicken and the egg. This is why trading is so hard. Nobody knows why. Nobody knows when. Everyone can go, hey, I told you it was going to bounce off of there. I just made 150,000. Then he goes quiet for 6 months because that was the only trade he got right. Well done. What was your odds? 50-50. Good job. You flipped a coin, you got it right. Flip a coin here. Is it going up or down? I haven't got a clue. There's a lot of reasons why it should go down. However, if oil makes a new high today, probably not. If the retail sales for the Canadian dollar come out 2% higher, probably not. If oil drops today and the Canadian retail sales come out 3% lower, yes, we'll be at 150 ADR. I don't know. A quick look at the New Zealand dollar CAD. I make myself laugh because I say the same thing every day. And yet people, and I'm not having a go at you, Peter, at all in any way, shape or form. Or whoever said that, AZ. No, who was it? Yeah. But, you know, it is literally that simple. And everybody's looking for that reason for something. There is never a reason for something. Why did the euro collapse when they increased their interest rate? It's not happened before, and it shouldn't happen. Why did it? Don't know. Will we ever find out? Just have to accept it. I got stopped out 5 times in a row. Why does this strategy not work? It does work. You just got stopped out 5 times in a row. Why? Because it went down. There's no logic in anything in this thing. It's a completely random thing that goes up and down at random based on bank and institutional movement. However, we get clues from the past. In the past, we can look at when fundamentals change in this way. Normally that happens. That's all we can do, isn't it? When it gets to these lines, normally it bounces. When we get to this time of day, normally that happens. All you can do is you can just extrapolate that information and try to use it to your best of your ability. New Zealand dollar CAD is stuck. So this is the 4-hour chart. So this is going back to 11th of August. I wouldn't even call this a price discovery. It's just another small range. Look at the RSI. We haven't even got above the 70 level or below the 30 level for all of pretty much August and September. That was the last trade I had. Just nothing, is it? It's just nothing. It's short at the minute, but it literally is nothing. I can't, you know, you look at it and go, what's it doing? Nothing. It's going sideways up and down. This is the sort of instrument where literally you could flip a coin and press the buy or the sell button based on a head or a tail, wait a day, do the same thing as you did yesterday. If it doesn't play out, wait a day, do the same thing as you did yesterday, and then get out. Look at it. If you'd have sold it here and you were totally wrong, you would have sold it the next day and the next day, and then the next day you'd be out. If you'd have bought it at the very, very high there and you'd waited a day and bought it again, you probably would have been out there. But if you weren't, you could have bought it again the next day, bought it again the next day, and then got out. Even if you'd had sold at the very high there and then, bought at the very high there, the very worst spot you could possibly think of buying, and then bought it the next day,
and bought it the next day, you would have been out. Doesn't matter what you do. Do whatever you want. There's no signals to do anything from my strategy. If you stuck a Bollinger Band on there, you'll probably find that's the best thing you could trade with at the minute. But what's happening next? I don't know. This could go parabolic for 3 weeks. Morning, Gordy. CAD Swiss is the worst stretch I've ever been in. Yeah. There's a lot of them about. There's a lot of them about at the minute. There's nothing you can do about them. It's just you got to deal basically. Take the losses as and when. Right, I'm going to leave it there. The DAX basically, I'm still in. It's not even a symmetrical triangle, is it? It's just a mess. It's just an utter mess. You can't even look at this and go, well, it's just a mess. So it will either do that or it won't. Nothing's moving, is it, at the minute on the indexes today? So I will see how I get on this afternoon. I suspect the US index open might be a bit of a tricky one this afternoon, because obviously we've got the news at 2:45, which is going to be the PMIs. So the market's probably going to hang around as it did with the DAX this morning. We had a nice break of the DAX this morning, but it was too quick. So it was almost like get the orders out of the way, right, sit there. So we might well get the same thing on the US this afternoon. So just be a little bit careful. It's Friday as well. And next week is end of quarter. So end of quarter, we're going to be making a lot of movement. So we'll see what happens with that one. But we'll update later on what's happened with the DAX. Did you end up taking profits on the US dollar Swiss and the Euro Swiss? Yeah, so US dollar Swiss, I got out there. So basically what I did with this one, we pushed down into propulsion. Then we had an up candle. So I put a trailing stop on this of, I think, 130. Yeah, something like 100. I think it was 130 pips. Yeah, it was a quarter of an ADR, 12, 120, 130, 12 or 13, whichever way you want to look at it. So when we got to there, I put the trailer on, and it just literally came up and took me out on the trailer. Euro Swiss, I did exactly the same thing, I think. Yeah, 13 pip trailer from there. Yeah, 12 again. It's a quarter of an ADR. So I got taken out on the trailer. We basically, that big candle worried me, because if this is going to be one of those fundamental moves that continues, which it isn't giving any clues really at the minute, is it? But if it is, I thought it better at the moment with the current losses that I've taken, just to take a little bit of profit than take a break even. It could come down and do that propulsion, but we've run out of news now. There's no more Euro news. So we will get a little bit of movement off the US dollar news across all currencies, but not dramatic, I wouldn't think. So market's in shock after this. The Swiss franc, the Swissies really shocked the market yesterday, as we saw. We had 300% ADR moves, because that was not expected at all, that move, was it? Maybe it's only my head, but most of the time the additional position in a trade is happening after 1 p.m. Position trading, you don't look at time. Time's irrelevant in position trading. It's movement. We're measuring moves. So when the moves happen is up to their moves. That's why this is why the market reversal alerts indicator is used. It doesn't matter when the moves happen. What we're interested in is, has the seller taken control of the market? When they do it is up to them. I don't care. When they take control of the market, I want to be getting in with them if that is my bias. So if you're using intraday strategies, then time is a little bit more important, obviously, because we know that in Asia it doesn't move much, and in Europe it does. So you wouldn't trade Asia, you'd trade London and New York. Same with the indices. We trade at 8 a.m. and 2:30 p.m. in the UK because that is when the market moves, those exact times. That's why we use those times. But if you're position trading, you're either position trading on hourly or 4-hourly timeframes, entering on the M5 or the M15. So it doesn't matter when it starts, does it? Typically, it's on news, isn't it? 1 o'clock in the afternoon, 1:30 in the afternoon is often when we get news released. So yeah, market moves on news. And if there is no news, it will move on bank pressure because the banks move the market on the news. And if there isn't any news, they have to just move it themselves. That's the way they work. So like I said, if you've got a $25 million, pound, whatever, order to place in the market, and there's a news event coming up today, that's when the liquidity is going to enter the market, because when that news event comes out, there's going to be a lot of activity around those currencies. So you execute your orders when there's liquidity. Why? Because it's easy. If I've got to get rid of this 25 million, I want to put it in the market when I know there's 25 million available to execute the orders. If there's no news today, I'm going to have to do it myself. So what do? You split it up into tiny little segments and then do a little buy, wait, do a little buy, wait, do a little buy, wait. You get a trend. Just what happens. Weekly range on New Zealand dollar Swiss before we go. Okay, so there's your weekly range here. 879 is our weekly on New Zealand dollar Swiss. 95. I can't count. That's because I'm measuring from yesterday. Let's try measuring from the start of the week, shall we? There you go. So that's your weekly range. Done. New Zealand dollar Swiss. 125 of your weekly range. Right, I'll leave it there. I'll be back this afternoon at 2:20. If you need anything, I'll be in Telegram. Hopefully I'll fix that problem for that person. Yeah, anything else we need, let me know in Telegram. Otherwise, back this afternoon at 2:20 or Monday morning at 7:50 for the Frankfurt session as usual. So have a good day. Hopefully it's profitable. And anything you need, let me know. I will see you guys later.